How's it going, everybody? Kyle Palaniuk here with Plan Prepare Home. I just wanted to take a minute and talk to you guys about credit scores. Credit scores come up all the time when I get questions about getting a mortgage and buying a home. Most people think that their score's not good enough, or they're just so intimidated by the whole process in itself that a lot of people don't even apply for a mortgage because they're just afraid of actually checking their credit score. So these days there's a lot more tools out there where you can kind of get a better idea of what your score is, and is the information you're getting out there even accurate? So first off, I just want to talk about the scoring process itself. Originally, FICO, which is Fair Isaac Corporation, was established back in the 60s or 70s or something like that. You can fact check me on that one. And they sort of set the standards for what the FICO model was. As they got more and more popular by banks using them to check people's credit history, more and more bureaus actually started entering the game. These bureaus are the ones that actually hold the data for what the model, the FICO score model, is based off of. So that's TransUnion, Experian, and Equifax. In a mortgage credit report, those three major bureaus are the ones that are actually being used to determine a borrower's credit worthiness, and we call it a tri-merged credit report. This is different than a credit report you'll see on like an Experian website, or if you go to your credit card company and they'll give you a score. The more you know about your credit history, the better you're going to understand your credit score and what it would be in a mortgage model. So if you're at a 685 with your Chase card, you would probably range anywhere from a 665 to a 700, depending on different factors, which we can go into in another in-depth video, but for now I'm just giving you an overview. So now that you know what your credit score is and you apply to get a mortgage loan, now we need to know a little bit more about how that translates into what kind of interest rate you're going to get. One thing about your interest rate is that it's broken down into different factors called loan level pricing adjustments. We did another video about these in particular, about how they've changed recently, but still undeniably, the credit score of a borrower is one of the leading indicators for which interest rate they're going to get. Okay, so now let's talk a little bit about how do you get a better credit score. This, again, could be its own video, but for now, I'm going to give you the general overview of it. In order to get a good credit score, you have to have a multitude of different things going on. But don't get intimidated by that. You always start one step at a time. One of the things that you need is to have some kind of credit history. So if you have a credit card, cool. You are now entering the race. You have data in the credit bureaus, and they can track your payment history and the exposure to credit that you have over time and start to develop a score. But what you really want is more than one trade line. So more than one credit card, a credit card and a car payment, a student loan, a car payment, and another line of credit, or multiple credit cards. As you start to get a diverse credit exposure, you're going to start to see your score go even further up. Now, those things are a little bit smaller than the number one factor in getting a good credit score. And what is that factor? You guessed it. It's paying your bills on time. So if you have just two trade lines and you haven't even had them for more than a couple of years, but you've always made your payments on time, you're going to be in the good to great credit range, just like that. The number one thing that we really see that drives a credit report down is not the lack of credit, or it's not the lack of diversity of credit, but it's actually negative factors on your credit history. And as those evolve, I know it's not really fair, but as they evolve, we hope that it leads a better indicator as to what the credit score should be. But what we're still seeing, even though it's been 60 plus years with having these models, is that people just don't quite understand exactly how important some of these things are into your credit. Make sure you pay your bills on time, and make sure if something is being sent to you that says, hey, you need to pay this, make sure you understand like the root of that information, and if they have access to your social security number, and if it's something you really do owe to get back, and contact them. Make sure you are documenting and contacting them to fix the problem. Even if you disagree with what it is, unfortunately right now, they have so much control over your potential credit future that it's not worth sticking it to the man, so to speak. So I hope that was like a nice little introductory video takeaway of credit and what it means. I'd love to like get more questions about what sort of topics about credit that we can do for next time, or maybe what we'll do is just a live Q&A sometime. So hopefully this is helpful. Thank you, Kyle Palaniuk here from Plan Prepare Home, and you guys have a nice rest of your day.